Let's bring in Wang Tao, head of Asia economics and chief China economist at UBS, to talk us through just over the whole reopening story in China, which obviously the market has hit the pause button on just the prospects of this. But just given the data that we've seen from the Lunar New Year, what does this tell you about the recovery now, Wang Tao?
Hi, good morning. Yes, I think China's recovery is well underway. So we have been monitoring high-frequency data such as the subway traffic, passenger traffic, also urban traffic congestion index. We're looking at, during the Chinese New Year, the travel and tourism. So everything is up related to consumer activities. Of course, they are still weaker compared to 2019, but they are significantly up from last year. And of course, also in general, I think just excluding the holiday period, activities in January is also stronger than in December. So I think the recovery definitely is on the way. But because of the holiday effect, but also I think some remaining cautions among consumers, I think the rebound initially will not be super strong as some people expect. And the market, of course, has already reflected quite a bit of that.
Yeah, and they've also, to your point, Wang Tao, they've sniffed out that it's not going to be rising at the same rate. Can you tell us a little bit more about the data then? So there was a pickup in recovery. What areas picked up faster than others, and what lagged?
Right. Areas that picked up immediately is related to travel. We have also done some evidence lab survey. We checked consumers before the Chinese New Year about their intention to travel. So indeed, I think we can see that more people want to travel to see friends and also to enjoy holidays compared to before. But I think people are still a bit concerned about reinfection, or people who have not been infected, they are a bit afraid. So in terms of the spending, the expected increase is not that high during the Chinese New Year, but expectation for spending more during the rest of the year is high. And people expect their income to grow by 7 to 8% this year, whereas last year the income growth was about 3%. So there's definitely that expectation and that kind of pickup. In terms of subway traffic, for the 18 big cities that we have data, things have really come up multiples compared to December average. But again, it's still below the 2019 level. And in terms of the travel and tourism during the Chinese New Year, in terms of the number of people, it's up 80. It's up significantly compared to last year, but it's about 80% of 2019 level, and spending is about 73% of 2019 level. So you can see, on one hand there's a pickup, on the other hand there is some gap.
But pretty close to getting back to the pre-pandemic, it seems too. I'm just wondering, when it comes to then, the macro picture. Yes, there's a reopening story. There's also a Federal Reserve that is slowing down the pace of their rate hikes as well. What does that mean for China's need for stimulus? Can I still expect rate cuts this year, for example?
I think China's stimulus probably is on the way, but may not reflect in MLF, sort of policy rate cut. But the central bank or the government has already guided mortgage rate lower. So a lot of cities now have mortgage rate in the 3% plus range, down from 4+%. So how to get corporate and household borrow is a very important issue, important goal for the government. So we expect actually more fiscal support and also more sort of credit support, including to the property sector. I think that is key. So I think in the first few weeks of January, of course, property sales is relatively weak because it's also Chinese New Year. And stabilizing property I think it's very important. And of course, continue to support infrastructure investment. These are some of the policy areas we're going to see. So mainly through credit policy, lower mortgage rate, and also more bond issuance and bigger fiscal deficit.